Welcome back to Street Smart. HP's billion-dollar cut in its sales forecast is just one more example of why the tech industry is lagging the broader market. The S&P Technology Index gaining 2.8% year to date, just about half the gain in the broader S&P 500 index. Joining us now with his forecast for the tech sector and to preview Dell's earnings is David Garrity, principal of GVA Research. He's been researching, advising, and helping to manage tech companies for more than 20 years, and we appreciate you coming on the program. David, let's talk about, this $1 billion cut at HP. I mean, that is from a forecast of $131.5 billion in revenue. So we don't want to blow it out of proportion just because we use the B word. How big are the problems there?
Well, I mean, the bigger issues you have to point out aren't necessarily just the revenue adjustments, but it's more what management had to say about the difficulties that they see inside their services business that accounts for about 40% of their profitability, and how it's going to take several quarters in terms of restructuring to get that business well positioned. And in the meanwhile, you still have the difficulties that Hewlett indicated are taking place in the consumer PC business, where Hewlett is the #1 vendor globally. And that on its own isn't necessarily going to get itself turned around overnight, because as we can see with Hewlett-Packard, they're not like Apple. They're not really dominant in terms of tablet PCs, nor are they dominant in terms of smartphones. They bought Palm in order to get themselves better positioned in those markets, but that too is going to take time to play itself out.
Well, nobody was dominant in tablet PCs before Apple brought out the iPad, right? I mean, how big of a game changer is that thing? Are people going to start saying, or have they started saying, I don't need a laptop or a PC, I'll just use an iPad?
Well, I mean, the indications are that tablet PCs can be used for sort of standard production type of PC work. I mean, people can do spreadsheets, they can do documents on tablet PCs. And if you look at major markets such as China, you get very strong responses saying that consumers, rather than going out and buying a notebook, at about $500, they're going to be basically instead opting for a tablet PC. And when you look at a market the size of China, obviously these numbers add up very fast.
What do you think HP has missed the boat in a lot of instances, not coming out with a tablet computer first, not expanding on higher margin services businesses? I mean, have they dropped the ball since Mark Hurd left? Well,
we can say that possibly even going back to the time that Mark Hurd was there, that the company had been underinvesting in terms of areas of growth within their various businesses. I mean, clearly, yes, they did miss the boat as far as the advent of tablet PCs. In all fairness, though, at the same time, I mean, tablet PCs as a form factor have been kicking around for some time. It took a confluence of a number of different technologies to make tablet PCs the form factor successful that it is right now. That said, though, the company, if they haven't missed the boat, they're definitely behind the curve.
Do you think they can pick it up? Can Leo Apotheker pick it up?
I would say that he can take it, but it probably takes about 4 to 6 quarters. And in the meanwhile, the stock's going to be in the doldrums.
Does Dell then use this opportunity to pounce?
Well, I mean, Dell isn't really all that much of a factor as far as tablet PCs are either, although they have a number of different form factors that are out there, whether they're 7-inch screens or 10-inch screens. None of them are necessarily getting the same market acceptance that you're seeing from Apple. And so Dell on their own has to prove themselves as a vendor in this regard. And I don't think that we're necessarily going to have any significant surprises on the positive side coming from Dell after hours, because I think what we saw with HP is something that's more indicative of the market as a whole.
Let's talk about the whole tech sector. We have day in and day out fund managers coming on saying they want to shift into tech. It's going to lead the market, and yet it has underperformed, as we showed. And we got a disappointment from Google this earnings season, a disappointment from Cisco, a disappointment from from Hewlett-Packard. Dell not out yet. No disappointment from Dell yet. So what's the story? I mean, why is this sector that everyone seems to love in the market not meeting expectations?
I think we need to go back and take some historical perspective here. We can go back over 10, 20, 30 years and see that every time that oil prices have gone up, discretionary items such as technology, and technology is a discretionary purchase, have typically suffered. And we are in a situation here where, granted, oil prices might have backed off a bit from the recent highs we've seen, but we still remain in an environment here from the standpoint of the global macroeconomy where it's more likely than not that oil prices are going to trend higher. That on its own is probably going to put something on a lid with respect to tech spending, and therefore probably put something of a lid on outperformance by that sector versus the broader market. So I say investors are probably better off being market weight, not necessarily being overweight the stocks.
Got it, David. Thanks so much for joining us. David Garrity there from GVA Research.